Hey everybody, welcome to my channel, Additional Source Income. Today we're going to go over part 2 of trading strategy. Make sure to watch until the end as I will be going over the importance of having a trading strategy, the different types of trading strategy, and developing your own trading strategy. If you're new here, don't forget to hit the subscribe button and turn on notifications so you never miss out on our latest videos. Developing your own trading strategy. Developing your own trading strategy is a personalized process that requires careful consideration of your trading goals, risk tolerance, and market conditions. Here are some steps to help you get started. Define your trading goals. Determine what you want to achieve through trading, whether it's to generate income, build wealth, or simply enjoy the process. Setting clear goals will help guide your strategy development. Choose your trading style. Decide whether you prefer day trading, swing trading, trend following, or any other trading style that aligns with your personality and schedule. Consider the time and effort you can commit to trading and choose a style that suits your lifestyle. Research and educate yourself. Learn about different trading strategies, technical analysis tools, and fundamental analysis techniques. Take courses, read books, and follow reputable sources to deepen your knowledge and understanding. Test and refine your strategy. Use a demo trading account or paper trading account to test your strategy in a risk-free environment. Monitor your performance, make adjustments as needed, and refine your approach based on real market data. Seek feedback and learn from others. Join trading communities, attend seminars, and interact with experienced traders to gain insights and feedback on your strategy. Learn from their experiences and incorporate their advice into your approach. Keep a trading journal. Document all your trading activities, noting both the initiation and termination stages, the thought process leading to each trade, and the outcomes. With this data, you will be able to assess your trading efficacy, spot recurring trends, and base your decisions on statistical findings. Remember, developing a trading strategy is an ongoing process that requires continuous learning and adaptation. Be open to new ideas, stay disciplined, and always prioritize risk management. Backtesting and optimizing your trading strategy. Backtesting is a crucial step in trading strategy development. It involves testing your strategy on historical market data to assess its performance and determine its profitability and risk characteristics. To backtest your strategy, you will need access to historical price data for the assets you trade. You can use specialized software or trading platforms that offer backtesting capabilities. Input your strategy rules and parameters, and the software will simulate trades based on past data. Backtesting allows you to evaluate the profitability of your strategy over different market conditions, identify its strengths and weaknesses, and make necessary adjustments. It helps you gain confidence in your strategy and provides a basis for decision making in real-time trading. Optimizing your strategy involves fine-tuning its parameters to maximize its performance. Through backtesting, you can experiment with different settings such as stop-loss levels, take profit targets, and indicators to find the optimal combination that provides the best risk-adjusted returns. However, it's important to exercise caution when optimizing your strategy. Over-optimization, also known as curve fitting, occurs when a strategy is too precisely to historical data, resulting in poor performance in real-time trading. Strive for a balance between performance and robustness and be mindful of the limitations of the historical data. Risk management in trading strategy. Effective risk management is a critical component of any trading strategy. It involves identifying and mitigating potential risks to protect your capital and ensure long-term profitability. Here are some key risk management principles to consider. Set risk parameters. Determine your risk tolerance and establish guidelines for how much capital you're willing to risk per trade or in total. This will help you avoid excessive losses and prevent emotions from dictating your trading decisions. Use proper position sizing. Determine the suitable trade size for each transaction by considering your risk tolerance and trading account size. Refrain from excessive exposure to one trade and ensure you distribute your investments across a varied portfolio to manage risk effectively. Set stop-loss orders. Always use stop-loss orders to limit potential losses. Place them at a level that allows for normal market fluctuations while protecting your capital from significant drawdowns. Use trailing stops. You might want to think about employing trailing stops as a means to safeguard earnings and solidify profits when the market trends are beneficial to you. Trailing stops have the advantage of adapting automatically in accordance with price fluctuations, enabling you to accrue more profits while at the same time providing a buffer against possible market downturns. Be aware of leverage. If trading with leverage, understand the risk involved and potential for amplified gains and losses. Use leverage responsibly and be mindful of margin requirements. Monitor and adjust risk. Regularly review and adjust your risk management strategy as market conditions change. Stay informed about macroeconomic events, news releases, and other factors that could impact your trades. Remember, risk is an inherent part of trading, and it cannot be completely eliminated. However, by implementing proper risk management techniques, you can minimize the impact of unfavorable market movements and protect your capital. Monitoring and adjusting your trading strategy. Monitoring your trading strategy is an ongoing process that involves analyzing its performance, making necessary adjustments, and staying up to date with market trends. Here are some tips for effectively monitoring and adjusting your strategy. Track and analyze your trades. Keep a record of your trades, including entry and exit points, profit loss, and other relevant data. Regularly review this information to identify patterns, assess the effectiveness of your strategy, and make data-driven decisions. Monitor market conditions. Stay informed about market trends, economic indicators, and news events that could impact your trades. This will help you adjust your strategy accordingly and avoid unnecessary risks. Make incremental adjustments. Instead of implementing significant modifications to your strategy, contemplate making minor, gradual alterations guided by your analysis. This approach enables you to evaluate the effects of the adjustments and prevents abrupt shifts in your approach. Seek feedback and advice. Engage with other traders, join forums or communities, and seek feedback on your strategy. Learning from others' experiences and perspectives can provide valuable insights and help you refine your approach. Stay disciplined. Stick to your strategy and avoid making impulsive decisions based on short-term market fluctuations or emotions. Trust your analysis and follow your predefined rules to maintain consistency and maximize long-term profitability. Remember, markets are dynamic and constantly evolving. What works today may not work tomorrow. By staying vigilant, adaptable, and open to learning, you can ensure that your trading strategy remains effective and aligned with changing market conditions. Conclusion: developing and implementing a trading strategy is a key step towards achieving success in the financial markets. It provides structure, discipline, and an edge that can give you a competitive advantage. By understanding different types of trading strategies, conducting thorough analysis, and practicing effective risk management, you can navigate the markets with confidence and increase your chances of achieving your financial goals. Remember, trading is a journey, not a destination. Continuously educate yourself, adapt to changing market conditions, and refine your strategy based on real-time data and feedback. With patience, discipline, and perseverance, you can become a successful trader and unlock the potential of the financial markets. Happy trading. Remember to subscribe and turn on notifications so you don't miss more videos from Additional Source Income, money strategies, and much more. Check out my playlist, and I'll see you in the next video. Take care.